So daily trading recap, let's get into it. What happened on today's trading day? Today is Monday, November 24th, 2024. Let's start off on the daily time frame. We unfortunately did not take any trades today. We did anticipate the shorts to the downside. However, that's something I will cover later on within the video. So stay tuned on how we look to improve from here within our trading. Now, on the daily time frame, we were continuing to the upside. However, we had retraced into this unmitigated daily bearish PD array. We thought we could see some confluence validating in market open. However, we didn't end up seeing the exact confluence we wanted when going down to the 4-hour time frame. Price action still continued to push to the upside, making that move. We had formed a new day opening gap, validated this 4-hour fair value gap we had right here, continuing to the upside. So I originally thought we would be bullish. That's what I originally anticipated. Marked out my daily draws, or my possible draws on liquidity. You could see right here they were all hourly highs. Now going to the hourly time frame, this is where we're actually able to dissect the trade and break everything down on how I got my bearish bias, how I turned from bullish to bearish, and where I think price action could possibly draw toward next, because I do not think we will reach these lows. Just wanted to mark them out for the sake of marking them out. Anyways, so continuing back to the upside, we also did make a 4-hour order block retracement. My bad, I know I just went to the hourly time frame, but we also made a retracement for the 4-hour order block. I forgot to mention that. Going back down to the hourly time frame, we were continuing to push higher on the hourly time frame, having not made any PD array retracements. Continuing higher, we ended up closing on the 8 a.m. candle bullish. Now the 9 a.m. candle, this is where it gets interesting. We ended up sweeping out this hourly high, previous candle high. If we go to the 15-minute time frame, what happened? Because remember, there was always a reason or a showcase within the micro time frame, price action backing up higher time frame confluence. So if we sweep out a high or a low, that means you're able to scale down on the micro time frames and see exactly what happened. Now that's exactly what we're going to do here. What happened on the hourly time frame in order to have caused a sweep? We were originally bullish. We understand that. We made a retracement for this 15-minute PD array, validated it, and I will go into all of our arguments, both bullish and bearish, and all of our commentary throughout the trading day in just a moment. But we see we validated this bullish 15-minute PD array, continuing to the upside, going down to the 5-minute time frame. What was happening? Well, what made me originally bullish rather than bearish was the fact that we were actually continuing to validate bullish PD arrays and form new bullish PD arrays off of the validation of prior bullish PD arrays. Simple terms, we validated this bullish fair value gap, created a new one, had seemed to validate it on the 1-minute time frame, and so on and so forth. That's all I mean when I say validating new PD arrays and creating new PD arrays. As simple as that. So on the 5-minute time frame, we actually ended up continuing to the upside. Right here, market open, I anticipated a possible sharp turn model to the downside. Lonnie, why would you anticipate a ST to the downside? Well, specifically because we had invalidated this 5-minute bullish PD array and at the same time formed a new bearish PD array. That to me was a showcase of the ST. However, it was not enough confluence in order to execute. A lot of people think, okay, well, just because there is a liquidity sweep, market structure shift, blah, 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 that's enough for me to execute. You always need more confluence. You will never go wrong within your trading waiting for more confluence. And if you do not want to wait for more confluence because of negative risk reward or because you want to make more money or whatever the case is, you're not trading, you're gambling. Remember, we are always putting probabilities within our favor when trading. That's all it is. Putting probabilities within the highest likelihood of being within your favor and executing within those probabilities and seeing the outcome. If you lose, that's fine. At least you know you executed within high probability. And if you win, cool. You knew that was What's the probability? Because you executed within a high probability situation. It's as simple as that. Don't overcomplicate it. Anyways, we continue back to the upside, invalidating this bullish or bearish, bearish fair value gap that I actually wanted to see validated. This gave me confluence that yes, we were actually looking to make the deeper retracement for the 15-minute fair value gap, validating it, continuing to the upside. Now here, I covered within a video on Friday. I did not end up posting because it just simply didn't upload because the internet was so horrible. On liquidity runs and liquidity sweeps. This candle closure to me showcased a liquidity run. We had the potential to continue to the upside. Well, Lonnie, if we had the potential to continue to the upside and we see we had formed this bullish PD array, which I would typically execute on upon validating a prior one. So this would have been the confluence continuing to the upside, and this fair value gap right here would have been the confluence for me to actually execute. Everything in this moment for me, according to my trading rules, in theory would have told me to execute. But why did I not execute? Why didn't I set my limit order? Why didn't I look to target a higher? Why wasn't today a losing trade? Because when scaling down to the 1 minute time frame, this is where scaling down to the 1 minute time frame is important. We knew if we were to have validated this 5-minute bullish fair value gap, that means we would validate these 1 minute imbalances as well. Right here. This is the 5-minute, meaning what? Meaning we would validate this 1 minute fair value gap right here. What did I anticipate? Well, I anticipated if we do validate this, we will showcase a market structure shift back to the upside. Why would I execute on the 5-minute time frame, have such a large stop loss with so much possible wiggle room if the trade does go within my favor, negating my risk to reward, if I can scale down, get a higher probability, higher probable trade entry with a better, more validating risk reward and trade stop loss. It just made more sense to have scaled down and waited on the 1 minute time frame for that market structure shift back to the upside. And on top of that, it would have given us extra confluence to see whether or not this 5-minute fair value gap, the bullish one, would get validated or not. That simple move of scaling down to the 1 minute time frame is what saved us from any potential losses and actually allowed us to switch to a bearish trade bias. Now, when this happened, we formed a 1 minute bearish PD array. This had not yet shown the sharp turn model to the downside I wanted to see. Upon invalidating this bullish 1 minute fair value gap, that's when I knew we were now continuing bearish and that bullish PD array would get invalidated. You have to understand that price action is fractal. However, you also have to understand how to sift through price action, when to scale down, when to stay on whatever the 1 minute time frame. And now some people may argue, oh, I only use the 1 minute time frame, I only stay on the 1 minute. That's fine, that's you. But I argue within the more broad aspect of trading, you need to know how to utilize every single time frame, and you need to know how to properly paint a picture, not just staying focused on the single time frame, but being able to use higher time frame narrative and even lower time frame narrative to paint the proper picture of when price action will make a move and how it will make a move. Simple as that. So what happened actually ended up forming a, bearish PD array, like I said earlier. When we go back to the 5 minute, what do? We formed this bearish PD array and unfortunately did not get our trade retracement. We were looking to see this PD array get, created and see a retracement into it for a short entry to the downside, targeting the new day opening gap. You could see we just liquidated to the downside. That was completely all right. Upon doing this, I had a conflicted bias. Well, Lonnie, why'd you have a conflicted bias? Because we were traced into a bullish confluence, the new day opening gap, however, had previously liquidated, sweeping out that hourly high. Don't forget that. So, what was Lonnie looking to do? Well, he was looking to not trade. You have to also understand when to not trade. It is fine taking a step back from the chart and not trading even if you don't get your trade entry. Now, people may argue, well, Lonnie, you never trade. You always miss your trade entry. That's where I mentioned earlier, me having not executed today comes into play. What I'm planning on doing is going in, analyzing my trade strategy, and really getting a gauge on how many trades I quote unquote miss due to not getting filled on my trade entry. And for you guys that do not know, I typically execute using limit orders. I'm possibly looking to execute as well, including this into my trade strategy, on breaks of structure or candle closures. The reason why I don't do this as of right now is because of, well, having to calculate the contract size on the fly with how the candle moves and how the candle closes, because I can't get an exact gauge on the number I want. So for example, if I want to risk exactly $1,000, I will never be able to exactly risk $1,000. Why? Because the candle movement fluctuates. Let's say right here at this candle high and to this swing high, that's $1,000 risk. Well, if the candle closes down here now, that's an extra $200 or $100 or whatever contract size I'm playing with, whether that be micros or minis. That movement will be those few points. So you also have to take that into account. That's why I just steered away from it. But I'm at a point where I could definitely manage that risk accordingly and get filled on a whole lot more trade entries and possibly take a whole lot more wins. Of course, keeping that confluence in mind of when to not trade as well, and possibly take a few more losing trades, but we really will see. I tend to only focus on executing within high probable market conditions. We've established that, and nothing is changing about that at all. I only look to execute when I have a clear bias and clear direction on the market, never any other time, and that's what I'll continue to do. So really, I only see a positive benefit of looking to execute upon candle closures. I will still utilize limit orders. Will I go in tomorrow and just start executing on every single break structure? No, that's not how it works. You have to have confluence backing your reasoning behind you executing always, always, always. So I am going to go test this in theory, in hindsight, look at the chart, see how it would work. But apart from that, still going to use our limit orders. Amazing trading day today. What can we take away from today's trading day? Well, the main thing we could take away from today's trading day is understanding when you don't get filled on a trade entry and your probabilities go out the window. Upon not getting filled, don't try to force a trade entry. You don't need to force a trade entry. It's okay. If you haven't traded in a week, you may feel anxious. You may feel like you want to trade. Control your emotion. Control your trade psychology, because remember, this is a test in order to prove to yourself that you are consistent enough in order to actually handle live capital with whatever you may be doing, whether you're in an evaluation, whether you are, simply trading demo, trying to prove something. You are proving to yourself. The moment you break your trading rules and trade outside of your high probability setups, obviously you will have times where you will, but speaking 9 times out of 10, you want to focus on emphasizing high probability setups. The moment you start breaking your rules and stop emphasizing them is the moment you fail to prove to yourself that you can actually take this game seriously. So tune out the noise. Don't allow what anybody else is doing. Don't, ignore the profits your friends are making. Ignore the losing trades your friends are, losing, whatever the case is. And focus on your own trading. This is you versus you. It's not you versus anybody else. So focus on improving day by day. Last thing I want to recap before I end the video are arguments. What were our arguments? We ended up forming these bearish arguments as price action continued to develop. Originally, we just had straight bullish arguments. We had 1, 2, 3, 4, 5, 6 bullish arguments and only 2 bearish arguments. As price action continued to develop, we continued to develop more bearish arguments. I apologize. Right here, you see beginning to invalidate bullish fair value gaps, bearish ST, new day opening gap acting as a magnet, heavy reversal, sweeping bullish highs, the sweep of hourly highs. It's totally okay to add arguments as price action continues to develop. It's not about just simply going in and having a strict argument on one side, market open, and just sticking to that. No, that's not reacting to price action. That's marrying a bias. You never want to marry a bias. React to what price action is doing and jot it down as arguments and see, okay, well, what is price action showing me right now? Then weigh the pros and the cons of each argument, then play into the probability of whichever side of the market is showcasing to you where it wants to go. So for example, today, showcase originally bullish, that's why we had more bullish arguments, then switch to bearish, that's why we had more bearish arguments. Then guess what? We had one more bearish argument, and we had stronger bearish arguments, so we played into the factor of bearish arguments, and unfortunately did not get our trade entry. It's as simple as that. So hope you guys were able to take away something from this. I am going to change the style of these videos. I want to keep them more cleaner. I don't want them to be more sporadic, but I have a few more videos I want to get out and upload that are a little more sporadic before I start focusing on better content creation for you guys. Apart from that, this is a longer video. Love you guys. Thanks for watching, and peace.